This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. It's a Tuesday morning. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Tuesday morning, and looks like it's going to be a good one, right? Given what we saw yesterday and perhaps some follow-on buying this morning as well. Fingers crossed for the bulls, but not too bad.
Well, not too bad. And, it's a Tuesday and it's Teachers' Day as well. So wishing all, teachers and everyone who teaches us in some way or the other a very happy Teachers' Day. And to both of you guys as well. I mean, we learn from each other every day. We know when the mood is good, when the mood is bad. And we help each other out. So happy Teachers' Day to both of you guys.
Absolutely. Happy Teachers' Day. I learn from both of you every day. And I think we learn from our viewers, our followers the most, right? I mean, the kind of feedback that you get, especially in today's day and age of social media.
It's not one way, it's two way, right? And I think that we are the better for it in that sense.
Yes.
So absolutely. So, I mean, wishing all of you a very happy Teachers' Day. And, it's a special one in schools and kids. And I mean, I remember Teachers' Day when I was in school. I mean, it used to be, a lot of fun.
You know what? I know this is going to sound like a big cliche, but the market is our biggest teacher, right?
Yes.
I mean, you learn so much every single day from the market.
Absolutely. And the day you stop learning, that's doomsday, right? So you speak to the biggest voices, they say, this market teaches you something every day. It tames you down at times, and at times it takes you to the sky.
Absolutely.
Well, let's just then quickly kickstart the day with what you need to know as far as the trading setup is concerned. Well, we got a decent follow-through yesterday, because Friday was, remember, a completely up and up kind of a session, and yesterday it was imperative that we saw some follow-through. It looked a little shaky at start yesterday. I mean, because after a decent open, the market sold off to the low point. And then there was a recovery which really did not stop after that. The Nifty ending about 0.5% higher. So it's very decent. We've closed above, basically the upper end of the falling channel, which we highlighted yesterday. So that's the resistance level I'm talking about. We've closed above it. Okay, not very much from overnight, right? In terms of cues, US markets were closed because of the Labor Day holiday. So very, very quiet kind of session. Nothing in terms of treasuries. It was a bank holiday as well. European indices also, by the way, for the lack of what happened in the US, we're looking at Europe. But if you look at what happened from the day's high, indices all sold off. A composite European stock measure, the Euro Stoxx 50 index, that ended absolutely flat, but off the highs. Now, oil prices are holding, and I think that's the big worry as we start another session. We are at about 89, so we're closer to 90, right? And 90 is a big, slightly sort of scary kind of number, and you don't want prices to push very much higher from here. You want a bit of a cool off. So far, the market has kind of completely ignored what's happening to oil, but that's the biggest macro variable for us, and it can swing sentiment either way. It's always been true, and it's true even now. So, watch that one very, very closely. This morning, by the way, I was looking at, Treasury futures, etc. Indication is that US yields will start about 3 basis points, 4 basis points higher. So, again, that's the other one. Now, coming back to levels and tying all of this in, on the Nifty, on the way up, the upper end of the daily Bollinger Band stands at 19,633. So that's the first level. We are at 19,530 right now. Exactly 100 points away is the first resistance level, which is 19,633. And then, of course, we talk retracements of the entire fall. And this is the level we put out the last 3-4 days. That stands at the golden 61.8% retracement of the entire fall is 19,700. Support comes in at about 19,460. Something closer by, basically. Otherwise, the band has been 19,250, 19,230 to about 19,550. But that's slightly further away. So, this is a working support level, which could be about 19,460 intraday. Now, Bank Nifty, it closed slightly above the 40-day exponential moving average, just a little bit. That stands at 44,517. We left off at 44,578, right? So, just a bit. So, that's the first level. On the way up, though, resistance will be all retracements. This is the 38.50 and 61.8% retracement of the entire fall from the July high to the August low, which is 44,660, 44,985, and then 45,300. 5312. Same number, the retracements don't change because the highs and the lows don't change. And we put these numbers out before as well. Supports can be kept at between 43,800 and the low, which is for the Bank Nifty not broken yet, which is 43,600. So broadly, in that range, the market should kind of find support levels. I mean, it's a constructive screen, not very much from the US. Let's just have the Gift Nifty open, 20 points, neither here nor there. The pace on the small cap side only picked up. I mean, we were talking about same time yesterday, the small cap index gaining 4.5% last week. Yesterday, it was up another 1.33%, 1.4% or so, the Nifty small cap index. So, that's the space to really watch out for. And so much happening in that sort of spectrum. So many stocks, so many companies really getting re-rated. Sonia.
Absolutely. And that's been where the action has been, right, over the last many days and months. But today looks like, at least for starters, we would perhaps try to build on to the gains that we saw. Remember, the sensex and the Nifty closed at 1-month highs yesterday, and there was quite a bit of traction actually. So the Nifty conquered that 19,500 mark yesterday. And, in the last 5 trading sessions, right, the Nifty is up about 1%. So there has been some amount of traction on the upside. Very interesting to see if we can build on to our gains. A couple of levels that I'm watching out for. The earlier high that we crossed was 19,632, and that's the next level to watch, which was the high on the 9th of August. Of course, after that, you have 19,800, 19,900. But this is the first mark on the upside that the Nifty will look to conquer. A couple of things to watch. IT, metals and cement stocks were the big gainers yesterday. And in that context, some of these stocks, whether you look at HCL Tech, whether you look at Infosys, right? HCL Tech is up 8% in the past 1 month. Infosys is up about 5%. Wipro is up about 5% in just 1 month. And in fact, if you look at the chart of Infosys from the lows of around 1,200 that it hit in the month of April, it's now almost back at 1,500. So there's quite a bit of ground that, a lot of these stocks like HCL Tech and Infosys have climbed in the last couple of months. That trend perhaps could continue. There was big buying from domestic institutions, not just yesterday, but in the past 2 trading sessions. DIs have bought almost 5,000 crores in the past 2 trading sessions. And as I said, a couple of these names in the IT space, etc., will be closely watched. Cement has started to pick up as well. So all eyes will be on that. But given take everything, it's been not too bad, actually. We've been climbing slow and steady. Let's see if we can continue to hold on to 19,500.
Well, Sonia, if Friday was the party, then Monday was the after party, right? And Prashant just celebrated his birthday. He was telling us what a great time he had on that one particular Saturday night that he went out to party.
We were not invited.
And there was an after party after that. And that's why he said the night was absolutely perfect. So though we were not invited, maybe there is something.
Why don't we get invited for these parties?
This is all hearsay.
Something's wrong.
This is all hearsay. Don't believe a word.
All right. Well, getting back to the markets, that yesterday was the after party, and the after party looked quite good. The Nifty IT index, that's the one that's outbeating the other couple of indices because it's making fresh all-time highs. Irrespective of what exactly is happening in the globe, there are fears. The commentary may not be that great. IT index making fresh all-time highs. The Nifty Bank, well, that's around 4% away. Now, there was a bout of short covering that did play out on the Nifty Bank yesterday, but still it's underperforming a little bit. And even in yesterday's trading session, well, it was a relative underperformer if you compare it with the performance of the Nifty itself. So yesterday, the open interest down by close to around 5% on the Nifty Bank, and that's the second day running. You have the total open interest that is lower. The desired result, though, is not coming about. You're talking about the total open interest on the Nifty Bank coming down by close to 12% in the first 2 days of the series, but the desired result still remains elusive. Maybe, in fact, it's bracing for a bigger upper move, but as of now, it's relatively underperforming. The FIs as well, they are lightening their positions, both on the long as well as on the short side. And the total open interest, the gross participation from the FIs, it's the lowest we have seen all the way since the middle of June. So the positioning from the FIs is relatively light. There could be a couple of reasons out there. You had 2 big corporate actions, that's the Reliance as well as HDFC. So the Nifty open interest could have been relatively higher because there was a hedge being used out there. That, be that as it may, it's still very, very light positioning from the FIs. In yesterday's trading session, well, on the option side, you had mixed data coming in. So they bought calls big time, but they also wrote calls. So that data point is a little bit mixed out. They're not giving you any big direction. In an uptrending market, though, you want to see put writing. And yesterday you saw that 19,500, 19,400 put, both of them were fairly active. Now, the crucial support zone is around this 19,400 to around 19,450 level. The 20 and the 50 DMA comes in around them. And yesterday we rebounded from there as well. So if you're looking to buy the index, then that becomes your near-term stop loss because that's the support zone. The Nifty Bank, though, that's been facing resistance at around 44,800 to around 45,000. The 50 DMA comes in there. The recent high as well is around there. So you'll want the Nifty Bank to at least test that level and try to move higher. Today as well is the Nifty Financial Services Index. So we'll keep an eye out on that index. For starters, we pull back closer on 25 points. I think at some point of time it does get bought into. But you'll have to watch that level on the downside of 19,400, 19,450. That's a crucial support zone. Upside, well, we could be heading to around 19,650.
Well, that's a setup and what you need to know as we begin another session here. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Arvind Sanger is our guest on the show from Geosphere Capital Management. We'll be talking global stuff with him. Our research team will get you CNBC-TV18's list of stocks to watch for the day. At 8:30, Siddharth Kemkar of Motilal Oswal Financial Services joins in with some fundamental talk.
All right, well, let's kickstart the show then with some opinion coming through. First up, we have Chetan Seth of Nomura, who says that despite risks of a US slowdown, a mild recession, he sees some value in Asian stocks at these levels and expects a mid-single-digit returns from spot by the end of the year. He says the key downside risks are a long recession in the US that affects Asian chip sector earnings, China's support failing to revive corporate earnings, and that US-China tensions could escalate. So these are the risks. He adds that the upside risks are a US Goldilocks scenario and China recovery strengthening due to unleashing of savings and a stimulus.
Okay, Vikas Jain of CLSA sort of weighs in on the high-frequency data, economic data points. He says that more than a third of the core indicators for the month of July point to a notable beat of the quarterly growth expectations, while less than a fifth hint at a significant miss. He says industrial indicators were strong, driven by an improvement in manufacturing and infrastructure activity. He adds consumption activity was the complete opposite of the previous quarter, with some indicators of rural demand suggesting green shoots, even as other growth trends remain healthy. He goes on to add that early indicators for August are indicating month-on-month growth seems to be moderating now.
All right, let's also get you some money market views then. We kickstart with Abhishek Goenka of IFA Global, who says that global risk sentiment has experienced a slight uptick thanks to China's consistent economic stimulus and the reduced expectations of another Fed rate hike. However, he adds crude has inched higher due to the voluntary supply, and any substantial increase in crude prices will add on to the inflationary pressure in India, which will cap any major rupee appreciation. In the medium term, he anticipates the rupee to trade within a range of 82.20 to 83.20 with a slight weakening bias.
Okay, on the bonds, Ajay Magnolia of JM Financial says that in the absence of any significant cues, domestic market may open a bit weaker on the back of higher yields in the US and higher crude prices. He expects the 10-year benchmark bond yield to trade between 7.18 to 7.23% for the day.
Well, we've got a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We're looking at Cipla, Mahindra Financial, Hero MotoCorp, Escorts, IEX, RVNL, Vodafone Idea, Oil India, and Nazara Tech. Most of them will be reacting to positive news flow, while on the flip side, Dr. Reddy's could be the lone stock on the negative side.
Okay, Arvind Sanger is managing partner, Geosphere Capital Management. He's joining us now to take some questions. Arvind, good morning. Good to have you with us here. Thanks very much. Just a quick word on, I'm going to start with what's happening here in India, and then we'll go circle back to the globe and the bigger picture. But markets here looking very strong. I mean, there's a deal activity super strong, equity capital market activity super strong, fundraising, blocks, I mean, you name it. And of course, the action in mid caps, small caps, micro caps, mini caps, just gangbusters. Arvind, what's going on?
Well, I think that, the earnings season was pretty solid. I think Indian economy is, we had a very strong GDP number come out for the last quarter. I think, people are feeling optimistic, and India continues to be one of the bright spots in the global pantheon of, emerging markets and developed markets in terms of the economic growth fundamentals. So I think there's a lot that's going on in India that is positive, and people are willing to pay for that. Given that growth is hard to find around the world, India is one of the bright stars.
Okay, India is one of the bright stars, given that growth is hard to find along the world. That's interesting because a lot of the traction has been in the broader markets, right? I mean, it's a 26% rally that the mid-cap index has seen this year. That's phenomenal compared to our own standards and global peers. So what is your own thesis of how to approach it? What are the sectors that you like? Which are the pockets of value?
So, we have, I guess, fortunately had a larger proportion of our portfolio in mid and small cap names. And that just is because we were finding value in different sectors, everything from, auto-related ancillary to companies in hospitality or, other industries. So I don't think there's a big overarching theme, but we see the overarching thing is that, both domestic industrial activity and domestic, consumption are benefiting in this economic recovery. But, having said all that, let's keep in mind, and there are many sectors we can talk about. The one sector that we're missing is IT, which I know you were talking about a little earlier. I'm not sure if we are jumping on that bandwagon yet, but, domestic healthcare, we like that sector. So there's many pockets where we are finding a lot of opportunities, but, it's mostly bottom up rather than making big macro calls. But I would say that the one fly in the ointment is what we're seeing from a inflation standpoint. We're keeping a close eye on that because that could be a bit of a headwind. We have financials too, but everything is going to be somewhat impacted by what's happening with inflation and what that might mean for RBI policy. That's something to keep an eye on.
Hi, Arvind. Good morning. I recall when you visited us here in the studio, you were telling us that power-related themes look interesting here in India, and that's played out perfectly well as well. So kudos on that call. But what about this rising crude oil prices? That's becoming a bit of a risk, right? And it ties in with that inflation worry, given that the monsoon has been subpar out here. How do you view that? That's a risk, right?
Yeah. So when I talk about inflation, the two things that we are most concerned about, one is that, the August rainfall was extremely poor, and therefore it's setting up to, maybe having some food inflation flow through, in the second, I guess, in the second half of the fiscal year for India. That could be a bit of a challenge. I think crude is something to keep an eye on because, Brent is approaching $90. It's not there yet. But, if China keeps stimulating, there's a risk that could also continue to help crude, and that could start to become a challenge. So I think those are the two major challenges on the inflation front for India. And so that's the thing that we would, keep an eye on because, there's always risk factors. But so far, the market's climbing this wall of worry without worrying too much about these issues. But it's something that could come to the fore as the market goes higher.
One of the things, Arvind, I don't know if you've kind of looked at it closely, is power, which is coming back into sharp focus here. And I'm not talking about renewables, which have been or which have gotten all the fancy and attention, but I'm talking about good old thermal power. So there is talk that maybe we're going to see another cycle of ordering in this space because we need the capacity. Power demand has been hitting new highs every day. I mean, much ahead of Power Ministry's own projections or market estimates, etc. The cycle may not be as large as the 10 years or 15 years ago. You had that ultra mega power projects, but a smaller cycle, but a cycle nevertheless. Any thoughts at all, Arvind?
Yeah, well, I think there's a good news and there's a bad news. The good news is that power demand is strong and is continuing to climb, and the companies that are in that sector are going to do well. Obviously, there's a lot of government involvement in the sector, so we have to be a little careful because anytime government, sees pressure on factors that might hurt inflation, there's always some tendency to get involved in a way that could hurt, earnings outlook. But I think the power shortages are real. That's the good news from a company standpoint. The bad news from an India standpoint is India is overinvested, or not overinvested, but invested a lot in renewables, particularly in solar. That is great for, maybe 9 a.m. to 4 p.m. But that is terrible, at 6, 7, 8 in the evening. So what you're likely to face, in our opinion, in the next year or two is some challenges. And again, this could be, crimp some of the industrial and consumer growth story would be that you get power shortages and brownouts and blackouts, and that'll cause industry to have to use more, diesel to operate plants. So that's the risk. But I think the government is now starting to realize that they have to reinvest or push investment, even in thermal power plants. Renewables alone are not going to solve the problem because we're 24/7. Base load is very important, and base load natural gas is too expensive. Nuclear takes a long time, and therefore we are likely to see much more emphasis reemerge on building new capacity on the coal-fired power plant, frankly.
In fact, just one final question, since we're talking about a lot of these new age sectors, right? Whether it's renewable energy, whether it's electric vehicles, there's lots happening in defense, railways are picking up in a big way. Within the consumption space, there's gaming, for example, which is suddenly catching everyone's interest. In some of these new age themes, so to speak, anything that you like?
Well, one of the auto component companies that we like is basically focusing a lot on global EV. We own one of the companies that is big in plastic recycling. So we definitely believe that there are pockets here where things are very interesting. We don't own a pure solar or wind or renewable operator, but we are looking at several of them and trying to find the right mix there. But I think that the reality is that conventional energy is going to be as much in demand, but I think some of the new age, opportunities are definitely something that if you take a 2, 3, 4 year view, there's going to be a lot to do there, and we are very interested in that area.
Okay, all right, Arvind, thanks a lot for joining in. Have a great day, and thanks for speaking to CNBC TV18. Let's slip into a quick break. On the other side, our list of top 10 stocks is lined up. Lots of stocks in the news this morning, so don't go anywhere. Welcome back. It's the start of a new day, and we have plenty of stocks to talk about as we begin the day. So without wasting any time, let's go straight to it. Ekta is joining us first up to talk about Cipla. Ekta, morning.
Thanks for that. Well, Cipla is in focus because they did announce to the exchanges that they made an acquisition in South Africa for around $48.6 million. They are acquiring Actor Pharma, which specializes in generic as well as OTC medicines. The company reported a revenue of around $12.6 million, so relatively small acquisition. The company says it is strategic for Cipla. It will help unlock future growth opportunities, leverage cost synergies in South Africa as well. Additionally, I'm watching Cipla as well as Dr. Reddy's and maybe even Torrent today because there is an Economic Times report which has indicated that Bain has approached Dr. Reddy's to explore a joint bid to buy out promoters of Cipla. Senior leadership from both sides have met to discuss as well as formalize the strategy. Dr. Reddy's is said to be evaluating the opportunity, countering the offer by Torrent Pharma. Dr. Reddy's, we did reach out to them. We did reach out to Mr. G.V. Prasad as well as the corporate communication team, and they have indicated that they have no comment on this story. Remember, it is a large bid. It is around 58,000 crores if you include the open offer at the current market price. So it is a huge amount, a huge sum of money for either even Dr. Reddy's or Torrent, which they will be putting in for acquiring Cipla if in case that comes through, and hence there could be concerns. And similarly, like we saw Torrent Pharma under pressure the whole of last week, we could probably see Dr. Reddy's under pressure simply because of the size of the deal and the fears on how they would fund such a deal.
Okay, all right, Ekta, thanks a lot for that. So plenty of action from the pharma space, but there are monthly updates that are coming in, and Abhishek joins us to tell us about Mahindra & Mahindra Financial Services. Morning, Abhishek.
Morning, Nigel. So, Mahindra & Mahindra Finance have had an August disbursements of about 4,400 crore, which is up 17.65% on a YOY basis and flat on a month-on-month basis. So, YTD, that is year-to-date, the disbursements are at close to 21,000 crore, up about 22.75% on a YOY basis. If you take a look at the disbursal trend in terms of the growth rate, the last 3 months, that is August, July and June, it has been below the 18% level versus historical number of anywhere about 35 to 40%. Collection efficiency remains stable at about 96%, which was the same in the month of July as well, and as well as YOY, that is August of 2022. So total assets is up 27% YOY and about 8% YTD and about 2.7% on a month-on-month basis. Stage 2 and Stage 3, which is the stressed asset portfolio of the lender, that remains stable close to about June levels. Liquidity chest is about 3 months of the requirement that is there. So with respect to liquidity as well, it is on stable course for M&M Finance. Back to you.
All right, thanks a lot for that. Well, the other two stocks that we're watching this morning, and both could be in the green. One is Hero MotoCorp. Now, they had a board meet yesterday and they decided at the board meet to approve an additional investment of up to 550 crores in the EV manufacturer Ather Energy. Remember, Hero MotoCorp already has 33.1% stake in Ather Energy, and now Hero will be subscribing to the rights issue of Ather, post which the shareholding will go up depending on the amount that they subscribe to. Now, if you look at the turnover of Ather, right, it has substantially improved over the last 3 years, and it'll come up for you on your screen. In FY21, they did about 80 crores, and now by the end of FY23, it's gone up to 1,800 crores. That is the kind of growth that we are seeing in the electric vehicle space, and Hero MotoCorp is betting big on that. As we know, Ather is into the manufacturing and design, engineering, etc. of electric vehicle products and electric vehicle, machinery, and hence Hero MotoCorp is looking to up their stake there. Now, Escorts Kubota, the stock in fact has had a big rally. It's up 50% in the last 6 months. There's a lot of news flow here. The latest is that the company will be increasing prices of their tractors from the 16th of September. The increase in prices will vary across models. So that, of course, is positive. But the reason the stock has been under pressure in the last couple of days, it was down yesterday as well, is because of the weak sales that we've seen in the month of August because of a deficient monsoon. So the sales were down almost 8.5% year on year. But in general, the stock is up about 50% in the last 6 months because there is, of course, reports as well as our own sources suggesting that perhaps Escorts could be selling its railway business. And if they do that, they offload their railway business, then of course that will be a big positive from a shareholder's perspective.
Well, absolutely. So keep an eye out on both those names, Hero and Escorts. More stocks with news flow. Vivek is here with that list. Vivek, morning.
Well, good morning. We've been highlighting over the past month about how due to the unseasonally low rainfall in August, the peak demand as far as India itself was concerned was quite high in terms of power. So this particular trend is being reflected, even in the numbers of short-term exchanges. So IEX yesterday gave an update to the exchanges as to the August monthly volumes, and it's been very, very strong. So the total electricity volume on the short-term exchange was up 21% coming in at over 8,469 million units. The day-ahead market volume was up 7.3%, and the real-time market volumes was up 21% on a year-on-year basis. The company says that the low August rainfall led to an unprecedented surge in electricity demand, leading to the strong volume uptick. Also, what they're saying is that the clearing prices or the prices that are seen on the exchanges actually rose, number one, due to higher demand as well as supply constraints. Do remember, though, that there is a ceiling as far as prices are concerned, as far as IEX is concerned on the short-term market. The other stock on our radar is RVNL. The company and the JV partner MCCC have actually emerged as the lowest bidder for Western Railway Vadodara Division project. The total cost of the project is 174 crore, and RVNL's share in this particular project is 75%.
Okay, all right. Thanks a lot for that, Vivek. By the way, on the bottom of your screen, you have Zentech as well. They have won another order, close to around 120 crores order. I remember a few years ago, the order book was dry and there was no execution taking place. Now, as per the last report, the order book is at around 1,250 crores odd, if I saw that number correctly. But there are a few more stocks to track. So Sonal joins us to wind this down with some more stocks in the news. Morning, Sonal.
Good morning, Nigel. Let me start with Vodafone Idea. It is in news on the back of Times of India report where they're suggesting that the company has gone ahead and they've cleared around 10% of the statutory dues that they had to pay to the Department of Telecom for April to June quarter. They are also committed to pay the remaining amount by September. Now, according to the report, the outstanding dues are to the tune of 700 crore rupees. So this would be a big positive. However, we have not independently verified this report. For Oil India, they have approved an investment, an equity contribution of 1,738 crore rupees in the joint venture of Northeast Gas Distribution Company Limited, where Oil India will be holding around 49% stake in this joint venture and 51% shareholding will be held by Assam Gas Company Limited. Nazara Tech continues to be in focus yesterday because of Nitin Kamat's investment there, and today it is in focus because there is a meeting of board of directors of the company on 7th of September. This is to consider and approve preferential issue of shares, so that stock will be on our radar as well.
All right, thanks a lot, Sonal, for that. So plenty of stocks in focus today. In case you missed out on any of them, here's a quick recap. Stocks with positive news flow: there's Cipla, M&M Financial, Hero MotoCorp, Escorts Kubota, IEX, RVNL, Vodafone Idea, Oil India and Nazara Tech. While the only stock on our radar with negative news flow is Dr. Reddy's. But let's find out what's happening in the brokerage corner. Surbi is here to give us all the brokerage notes that you need to focus on for the day. Surbi, morning.
Morning. So the first one is on Raymond. It is an initiating coverage by Jefferies. They have initiated with a buy rating and a target price of 2,600. They say that the company has already addressed the past investor concerns on debt and the corporate structure, and now the company is net cash and is set to list the lifestyle and the real estate business separately. The growth focus is visible across business segments according to them, which is going to be led by the category expansion and market share gain. They expect Raymond's revenue and earnings to grow at 13 to 24% compounded rate over the next 3 years. Interestingly, Motilal Oswal has also initiated coverage on Raymond with the same target price of 2,600. So Raymond will be on our radar. Antique has written on Prince Pipes. They have reiterated their positive stance. They expect a 14% volume growth over the next 2 financial years. They see improving penetration and new plants will drive incremental growth. Operating leverage is expected to deliver an EBITDA growth of 14%, and the bathware segment entry has set the tone for long-term double-digit revenue growth according to them. And lastly, Jefferies has written on the power sector. They said the peak power demand has outpaced the availability most days since the last fortnight. Also, merchant power prices are trading at a cap of 10 rupees per unit in the first 3 days of September. Coal stocks are at normalized levels of 10 days and above. For them, their top picks are NTPC, Power Grid and JSW Energy, and they have an underperform rating on IEX and Tata Power.
Okay, thanks a lot for that. So let's keep an eye out on all of those stocks. Thanks, Surbi. But let's move on. The Brent crude prices is something that everyone's been tracking, right? Still almost at $89 a barrel now. Manisha Gupta joins in to give us a quick roundup of all the action there. Manisha, hi, good morning.
Morning, Sonia. Thank you for that. Well, yes, the crude oil prices have been surging and are up at around 7% in last 1 week itself. The dollar index coming off its highs, the strong Chinese measures, OPEC and allies talking about more production cuts in the month of October have been some of the supporting factors. Apart from that, it also is about China taking a lot of stimulus measures. So whether it's about, personal consumption, real estate sector, tax rebates, China has been doing a lot. and markets are taking cues from that as well. Already done 89 on the higher side. The street believes that 90 and 92 is where the crude prices could be looking at some resistance at. The markets will watch out for the Chinese trade data that comes in this week, and that would give you further directions.
Marisha, thank you very much for that. That's commodities and, of course, China, the big mover there. We'll take a quick commercial break here. Siddharth Khemka of Motilal Oswal Financial Services will be with us on the other side for some stock talk. Stay with us.
Welcome back. Hope you're having a good morning. Overnight, the US markets were shut, and the gift nifty is suggesting we pull back a wee bit to kickstart to a 20-25-point downtick after 2 days of very, very strong rally. Plenty of stocks to discuss. Siddharth Khemka, the head retail research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning. Thanks so much for joining in. Well, I wanted to ask you about the big deal that we're looking forward to in the pharma space. And Cipla is involved. Now, they've done a small acquisition, overnight. But otherwise, how do you view the stock from here on? They're making some inorganic growth, and probably there could be a deal waiting by as well. Your take.
Yeah, very good morning, Nigel. Thanks for having me on the show. If you look at Cipla, I think while the company has been doing pretty well, there have been concerns with regards to the succession, and that is clearly coming out now with the management talking about going out full-fledged to exit the stake that they own. Anyways, they own about less than 50% stake, about 33%. And we have heard that several PE players were in fray, and now Torrent Power has come into the picture and is trying to bid along with some of the other PE funds. So I think the stock would be in focus till the deal is done, because post the deal there would be another 26% open offer by the acquirer. So the new company which will be acquiring will end up having a stake of more than 56%. And to that sense, Torrent, it's a bold step for them. They are number 6 in terms of size in India right now. The acquisition will take them to the top slot in terms of domestic business, but on an overall basis, they will be number 2 in terms of combined revenue. But the size of acquisition will be large for them, and it needs to be a leverage buyout. We'll have to see how they structure the deal, how much of debt they take on the books, and how much the PE investors are willing to get to take on it. So I think more than Cipla, which has definitely taking some strides in the South African market where they are strong, while Torrent, we have seen in global markets, they are very strong in Brazil, and even in the domestic markets, the products don't overlap too much. So it will be a good complementary synergistic acquisition that Torrent could think of. I think if Torrent can pull this off, it will be positive for them. Cipla, based on the price deal, the stock has already moved up by 10% since the news came out that the promoters are looking to exit. And from here on, I don't think there could be a much upside apart from some premium that the new acquirer would be looking to pay from the current price levels.
Okay. The other stock I wanted to ask you about was Hero MotoCorp, Siddharth. I don't know if you have any interest there, but it's almost at 3,000 rupees now. In the last 6 months, the stock is up about 20%, and the company is now, raising its stake in the EV manufacturer Ather Energy. Is the risk-reward favorable for long-term investors, or do you think that the deficient monsoon is something that could, derail the stock?
Yeah, Sonia, good morning. So if you look at Hero, they have been lagging behind in terms of their EV penetration, which we have seen strong growth, especially in the two-wheeler space, because of the group company Hero Electric, which kind of made bigger strides, and that kind of lagged. Hero Moto lagged in terms of growth. Now with this acquisition, I think their penetration should be strong. The core business, as you rightly highlighted, depends a lot on the rural economy, where the sluggish monsoon definitely kinds of hamper the sentiments. But if you look at the overall valuation, still the stock is trading at about 15 times FY24, which is kind of a huge discount to the peer groups, be it a TVS Motor or a Bajaj Auto. So if you look at Bajaj Auto trades at about 17 times, but if you look at specifically TVS trades at almost 33 times. So it's almost half of what TVS trades at. And TVS has, as I said, taken huge penetration in the two-wheelers EV space, and that is what the market is liking. So if they are able to grow their EV space, I think the valuation could inch up. We currently have a buy rating on Hero Moto with a target price of 3,600. So definitely risk reward is favorable. Our growth estimates for current year stands at about 28%, but then that growth tapers off for the earnings to about 7-8% next year. So there is definitely some sluggishness in terms of growth, and hence the valuation discount. But as I said, the risk reward within the two-wheeler space is favorable for Hero Moto, and if they are able to deliver the growth, I think we could easily see some upside from current levels.
Okay. So that's just, coming back to you in just a bit. But actually, why don't you listen into this next conversation, which is, with the rarely seen or heard from management, which is Amara Raja. During our special broadcast Inside Out, we caught up with Harshvardhana Gorini, Executive Director at the company that is Amara Raja Batteries, to get a deep dive on their business momentum. Management told us they're betting big on the new energy business, which could grow to be around $1 billion if things go right. Listen into a slice of that conversation. That is Amara Raja. And Siddharth, a question coming your way. Listen in.
We have dominant market shares in Singapore, Malaysia, Cambodia, UAE, Bahrain, right? So this is because of our long tenure there. We're looking to get deeper into these geographies, pushing more into areas like Indonesia, Malaysia, Philippines, other African markets also, especially Western Africa, which are developing at a faster pace. But there's been a few geographies we haven't touched, like the Western markets, Europe, and the Americas, which we're having some initial success in now, and that's going to play a big role in our geographical expansion going forward. Now, these geographies like Europe and North America, there's a home for our premium technologies as well, like enhanced flooded batteries and AGM batteries, which primarily power the start-stop applications we're seeing more of now, and generally, more the higher load of onboard electronics we're seeing. So our technologies are easily deployed there, and we're getting a better value realization. So in the next 5 to 7 years, we're looking to have an equal amount of automotive exports as to our volume domestically. We would estimate that in the next 7 to 10 years, we would be looking at about $1 billion business. right? Many things have to go right, and that's with the current understandings of our technologies, our process, and raw material availability. Then, in terms of capex, we have an ultimate plan of about 9,500 crores here in Telangana in our Amaraja Giga corridor. They'll be done in phases, and there'll be milestone-based triggers for the investments, starting with an initial capacity of about 2 gigawatt hours in terms of cell manufacturing capacity. Lead acid to start with, I think we're at about 1.2 billion right now in USD, and we would be taking that to about 3 billion in the next 6 to 7 years. This is largely based on our globalization strategy, where we're also getting much better price realizations, getting a premium for the advanced technologies. On the new energy side, the contributions will come in. It's like I said, it's hinged on the market development, but we're looking at looking at a much more impactful business in the long run.
All right, interesting chat there Sonal had with the management of Amaraja. Siddharth, I want to ask you, any view on the stock?
Yeah, Nigel. So I think what we heard was what even we feel in terms of outlook. The core business, the growth is not that strong, and the future definitely depends on the new energy business, where the company is definitely taking some strides. But till the time the contribution from the new business doesn't become meaningful, that is still 4% of revenue right now, I think the stock could remain a bit sluggish. Valuations are inexpensive at about 12 to 14 times on a forward earning basis. But as I said, the core business is not that strong, and new businesses will take time to develop into, to significantly contribute to growth and to profitability.
You know, Siddharth, by the way, sugar stocks yesterday all rallied, right? I mean, and we're not just talking about stocks, companies based out of one region like Uttar Pradesh or Maharashtra or some of the other sugar-growing states. But look at, I mean, the breadth of the move. Bajaj Hindustan, Balrampur, Dalmia Sugar, KCP Sugar, Renuka, Sakti, Triveni, Dhampur. So that's almost 6-9 names there on your list in terms of what did very well. Now, you know, we'll understand in terms of what's going on, etc. At the margin, in the morning, there was news which came through that, and this was source-based, that at least the government of Uttar Pradesh is considering increasing the price given to farmers for cane, which is negative for mills, right? But stocks all rallied, but not just UP sugar mills across the board. So could there be something else at play here? We have, by the way, two sugar managements joining us a little later. Triveni Engineering and Dwarike Sugar Managements will join us at 9:40, and we'll kind of sort of put some of that to both of them, but that's coming up a little later. But Siddharth, any thoughts at all in terms of what's happening? What are we missing here?
So if you look at Prashant Sugar, the futures commodity prices have headed to almost 2-month high, mainly on back of the concerns of the low monsoon, both in India as well as in Brazil, leading to a lower production output in the key producing countries globally. And that has led to sugar prices in India also going up, as well as in the global markets. Now, there is another concern that because of the low production, India might there could be more exports curb, and that is leading to even further higher rally in the global sugar prices. Coming back home, I think the news of UP increasing the sugarcane prices definitely hits the mill manufacturers, but it shows that the kind of demand-supply scenario is there in the domestic market. The core, if you look at the structural story of ethanol, that continues to do well, and with crude price now inching up again to $85-88, again the focus on increasing the blending of ethanol will be much higher. The procurement will go up. So I think overall the sugar setup in the domestic market looks quite good. The sector has not performed, and in the current market where we are seeing a lot of niche sectors rotation happening, sugar is kind of well placed in that space. If the sugar prices, domestic sugar prices remains firm, the mills will definitely benefit. And if their profitability improves, even the companies like Praj, that continues to do well. So within that space, I think we like Balrampur Chini, which is the kind of market leader, and Praj, which is an ancillary play for the overall ethanol blending story, these would be the preferred players within the sugar space.
Okay, so that just wait by. We'll come back to you. By the way, there's a business update coming in from Paytm as well. It's a 20% growth in the average monthly transacting users in this quarter. So that's a 20% growth. Not bad at all. 9.4 crores for the quarter to date. That's the MTU. But let's do one thing. The market has been at a 1-month high and the trend has been on the upside. So let's find out more. Anuj is joining in this morning with a quick trade setup. Anuj, good morning.
Good morning, Sonia, Nigel, Prashant. First of all, happy Teachers' Day to all of you and to everyone. We learn something from everyone on a daily basis. Coming to the markets setup, the one internal that I focus on is number of stocks hitting new high on the BSE. That number has been hovering between 200 to 300, but after last 2 days rally, that's jumped to 400. 400 stocks at new 52-week high. But it's a healthy mix. A group 126, B group 113, and others 161. If you're having a bad day, just think about those who have this one stock at 52-week low in A group. That number is very low, just about 29 stock. That number, when it starts to hit 500 to 550, is when you start to get a bit worried. Till then, I think the market's upside is intact. Yesterday was the perfect session for the bulls. The bulls' grip is back after an average August series. The first 2 days of September have been perfect. We had a rally on Friday, then yesterday gap up, a collapse, and then a close towards the high point of the day. Just about the absolute perfect setup, which tells you the market's texture has changed to buy on dips once again, which was sell on rally in August. It's even possible that you hit a new high in September series, and a good chance of that happening before even that special parliament session convenes. That's what the market's betting on, actually, and that's what the kind of stocks which are rallying is telling you. And unless global market completely collapses, there's a good chance that global cues take a bit of a backstage and you focus on purely domestic cues. And there's one last round of exuberance left in mid-caps, as I said, going by that number of stocks hitting 52-week high. As far as today's outlook is concerned, on the Nifty, the first resistance is 19,550, which is the previous breakout zone, and the bigger resistance is 19,625. And I'm sticking my neck out. It's possible that you hit 20,000 in this series itself, maybe even higher. It's possible. And if you look at the Bank Nifty, that's the one area which has been sort of underperforming. And my sense is that perhaps still for the near term may not offer you the best trades. The best trades are in Nifty and in individual stocks.
Okay, all right. Thanks a lot for that, Anuj. Well, time to slip into a short break. On the other side, we'll be joined by Mitesh Thakkar and Sudarshan Sukhani, who will be joining in to give us their technical trades. Stay with us. Welcome back to Bazaar Morning Call. Well, as promised, let's get you some technical picks. We have Mitesh Thakkar as well as Sudarshan Sukhani who join us on the show. Good morning, gentlemen. Well, Mitesh, you go first. What's the trade on the index? 2 good days. Are we bracing for a third good day? Though the start is likely to be mildly in the red.
Morning, Nigel. My sense is that there's a good chance that we'll end up in the positive. Last few days, last 2-3 days, in fact, we've changed our view from consolidation and contraction to now possibly some sort of expansion. That means that at least at the minimum, we should test the upper end of the broader range, which is closer to about 19,650, 680. And there's a chance of us moving beyond that as well. So there could be a 1 day, 2 day kind of volatility around that level. But my belief is that we are heading higher, and therefore trading should be on the long side. The entire system is possibly egged on towards some strong support coming in from the Nifty IT, which could catch up for its underperformance and deliver strong returns in the coming few days. So I would believe that there's a higher chance over the next few days that the closing will be higher than the opening levels.
All right. Sudarshan Sukhani is also with us. Sudarshan, it's been a good market so far, at least the last few days. Do you reckon that there could be more build-up on the upside? And if yes, what's the best way to approach it, both on the Nifty as well as on individual stocks?
Yeah, good morning. Well, since last week, I've been saying we are finding support at 19,300. Let's go long. Let's buy every dip. And naturally, the market will oblige us when it wants to. It doesn't mean that just because I say it, the market goes up. But eventually, we have found that we have been catching an uptrend. That uptrend remains intact. The trade for the Nifty is to buy every dip. Now, you have to define the dip yourself. That depends on your trading style and your trading aptitude. But the trade is with 19,300 as your stop loss. Stay long in the Nifty. We could be surprised on the upside. Unfortunately, the same is not true with the Bank Nifty. While the Bank Nifty is making those higher highs, higher lows, it's reaching a very significant resistance levels and it's fairly volatile. So look for sharp dips in the Bank Nifty, but for Nifty, you can buy shallow dips also. Now we come to stocks. Balkrishna Industries, all the stocks have the same pattern. Big rallies, small correction, consolidation, and expected breakouts from the consolidation. Balkrishna Industries is a buy with a stop under 2,300. Glenmark, same pattern, is a buy with a stop under 750. And United Spirits, a long consolidation, is a buy with a stop under 980. Brokerage Consumer Products is my only intraday short with a stop above 1,011.
Mitesh, what about you? What would your stock ideas be for the day?
I do have a mix of buys and sells, but clearly more trades on the buy side. From the IT pack, Tech Mahindra is something which I like. I think it can test levels of around 1,300. So that's a buy with a stop below 1,234. IRCTC, that's a buy as well. Keep a stop at 690. Look for targets of 725 here. And the final buy call is in Motherson Sumi, which I would recommend with buying with a stop below 100 for a target of 106.5. One sell call, that's Aurobindo Pharma. And Pharma is now looking like getting into profit booking zone. Not a very declining kind of a mode, but it could give mild pullback. So Aurobindo Pharma can decline to about 790 odd levels, and a small short position can be taken with a stop at 832.
All right, thanks, gentlemen, for that. We'll come back to you all for another call in the next few minutes or so. For the time being, though, we'll slip into a short break. But on the other side, we'll get you pre-opens, as well as we'll get chatting with Mangesh Badang of Sectoral Broking. He'll give us his take on the cement companies which have been buzzing of late.
Okay, there is some important news at the bottom of the screen. This is coming through with regards to the G20 summit, which is in Delhi later this week. So a US embassy spokesperson basically saying that ahead of the G20 summit, the US president will test regularly for COVID-19 and monitor symptoms. The first lady has been detected with COVID, mild symptoms and all, but of course, in light of that, some doubts about whether President Biden will be able to make it or not, but the comment coming in that be tested regularly up to the point when he needs to travel. Okay, so that's the big one, and that will take a lot of news space, airspace over the next couple of days. The G20 summit in Delhi. There's another news flash, by the way. DRL has clarified on reports of the Cipla bid, says can't comment on market speculations. Okay, so that's pretty standard. Not saying this or that, but basically saying that. They can't comment on, speculation and rumors out there. So let's bring in our F&O expert, Manoj Muralidharan, Vice President, Derivatives, Religare Broking. Manoj, good morning. Good to have you with us here. Thanks very much. Are we, picking up a little bit of pace here on the frontline indices, on the Nifty, on the Bank Nifty more than Bank Nifty maybe, and what's the strategy?
Good morning, Prashant. Last time also, Prashant, the basic that we have here is for the September series, the amount of short position that was there in the Nifty is lesser than what we saw in the August series, and FIs are almost at 52%. But irrespective of that, it is the Bank Nifty where we have seen a good almost 9 to 10 odd lakhs of short covering in the last couple of days, and those shorts has a weighted average price of somewhere close to 45,200 to 400 on the future. So 44,450 on the spot becomes a good level to go long. I believe that for this month of September, there is a high possibility that the Bank Nifty might do a good catch-up job. The ratio between the Nifty and Bank Nifty is somewhere close to 2.28. Now that has way all the way till 2.34, which says that at 45,800 spot or almost 46,000 is a very fair possibility for this month of September. So buying an option trade or going long at 44,450 and the Bank Nifty with the stop loss of 44,400 and a target of almost the short-term target of 45,200 would be the first trade. For Nifty, yesterday, if you see, for the first time, for 19,500 strike garnered good strength, and there was good put writing, almost 1 lakh contracts. So we believe that this dip of 19,450 on the Nifty becomes an excellent buy, and the target would be 19,650. Again, that is the weighted average at which the short positions come into September series. So statistically, yes, September has been a positive month, but Prashant, again, the fresh buying which has to come is still not come. So the short-term target would be 19,650 and 45,200 respectively. Stock specific, we believe that there are two stocks which can outperform, and we like. One would be Marico and second would be Coal India. Coal India would be the stock of the month, wherein we expect that for this entire September series, the stock has a potential of almost 260 on that, but we recommend buying it closer to 242 to 243, sorry. Yesterday, the stock was up 4%. So wait for a dip for 242 to 46 would be a good level to go long. The target should be 460. Marico as well from the FMCG has seen good rollover in the last 3 to 5 days during the expiry. So we believe that Marico has a target of somewhere close to 595 and the stop loss should be around 560 on that. Around 575 is where we recommend buying this stock.
All right, thanks a lot, Manoj, for joining in. Have a good day. That is the pre-opening rates which are kicking in right now. Absolutely flat, actually, for the market. Not too much happening. Just pivoting around that 19,500 mark. Cipla is the one that's buzzing up almost about 2% Tata Motors is up about 1%. Still the biggest gainer on the index this year, up almost about 60%. That's the opening of the rupee, by the way. It's very quiet. I mean, flat compared to what we saw yesterday, around 82.80 to the dollar. But let's do one thing. Let's get our momentumizer stock of the day going. Reema is joining in to give us the latest on that. Reema, over to you.
Hi, Sonia. Good morning. Well, the momentum was all in the railway stock. So in that, I've picked Texrail, which was up close to about 6.5% yesterday. In the last 3 months, the stock is up 56%. Sorry, in the last 1 month, it's up 56%. In the last 3 months, the stock has gained 170%. And year to date, the stock is up close to about 180%. The volumes, too, were on the larger side yesterday. 1 crore shares traded versus a 1 month average of 68 shares. Nearly 47 lakh shares got marked for delivery, much higher than what we typically see. Just to recap some of the recent news flow, on 10th of August, the company entered into a strategic alliance with Hindalco for making aluminium rail wagons and coaches. The order book of the company, as stated, post their Q1 numbers, was about 800 crore rupees, and the promoters have been, slowly and steadily upping their stake in the company. So 3 years back, in September of 2020, the promoter holding in Texrail was close to about 51.5%, and that has risen to 58.7% as of June 2023. Back to you.
All right, thanks a lot for that, Reema. So that's the one that's been feeling the momentum, Texmaco Rail. But let's focus on the cement companies. They've reportedly taken price increases for the month of September, and with strong demand and falling input costs, things are probably looking up from here. Mangesh Badang, the Senior VP Research at Centrum Broking, joins us on the show. Hi, Mangesh. Thanks so much for joining in. Well, what are you making of these cement companies? It's monsoon, normally a grim period, but this time around, I mean, it's been a good monsoon. Demand is higher, pricing is moving up as well. So give us a couple of details. With this sort of a mix, are you penciling in some EBITDA per ton improvement in Q2, even comparison to Q1, or do you expect a flattish number?
Good morning, Nigel. Yeah, it was quite unusual, the September hike. So we have seen cement companies increasing prices by 5 to 10 rupees across the region, and the price hike is actually being higher in the eastern region. We are not too sure whether this will be absorbed by the market, but at least the initial indication is that the companies do want to press ahead with the price hikes in the month of September. The reason why I said it is unusual is because generally September being a monsoon month and there are festivals around, you don't generally see a price hike in this time of the year. So having said that, what companies are trying to do basically is that there has been a recent increase in operating costs for the sector as the imported pet food prices have started moving up. And plus, in probably these are one of the last 2 quarters before the election code of conduct starts hitting in the 4Q. So they would try and maximize the EBITDA as much as possible before getting into that period. So what I feel is that anyway, second quarter, the EBITDA per ton was going to expand on lower P&L cost, and this should actually aid it further, the better realization.
How much will it go in? If you could give us a ballpark number for the second half of the year, how much can the EBITDA per ton improve for the cement companies, for the industry? And there are a couple of them that will see outsized increase, if you want to highlight that.
Yeah, so what we are penciling in right now is that from the exit of 1Q FY24, there would be around 150 to 200 rupees increase in EBITDA per ton, and which is largely because of the reduction in power and fuel cost. Currently, we are not factoring in any substantial realization growth for the sector. So if this does sustain and we do get YY increase in growth, I think this is something that could surprise us positively. But in terms of surprises, I think northern region has been doing really well in terms of pricing as well as demand. So I think the positive surprises in the next quarter probably should come from that segment.
Sure. No, Mangesh, hi, good morning. This is Sonia here. One of your top picks in the sector is Ultratech Cement, and if you go through the chart, you'll notice that there's almost a 20% rally that stock has seen in the last 6 months. At this price of almost 8,600, is the risk reward still favorable? And if yes, what are the target prices you're looking at? What kind of earnings growth are you penciling in?
So, see, our view on the company is that this is a market leader, and despite undergoing one of the largest capex in the history of the company, this company will be debt-free in the next year. So even though the valuations currently are not favorable, but we do believe that we would start seeing, at least the accumulation should happen at this level, because if you compare it with some of the other peers, we do see that there is some more steam left in the counter. And I think that is one stock which is an index stock which I believe one should be equal weight or overweight on just to play the sector.
You also have a buy on Birla Corp with a target price of 15.25. What's the upside that you're looking at in terms of earnings over there? And given that, this demand is good right now, but post-election, there's an expectation that perhaps there could be a slump. So heading into that, how are you penciling in the growth for many of these companies?
See, for Birla Corp, the view is that the stock has been undervalued, and we are going to see improvement in the profitability as well as deleveraging from the company. The improvement should come as the new plant of the company at Kukurban ramps up, and the deleveraging should happen because now the focus is on balance sheet hygiene. So that is the combination which we believe that makes Birla Corp a re-rating candidate, and that's why we have a buy on. And you're right, we do see that, the FY24 could probably be the third year wherein cement demand growth has been consistently higher. And in the last 3 years, if this year turns out to be 8 to 9% or 9 to 10% growth, we would see a CAGR of much higher of 9 to 10% in the last 3 years compared to what we have seen in the past. So following it up in a post-election year in FY25 is going to be difficult, and that's why we are expecting FY25 to be flattish or with 2 to 3% growth only. The companies do understand that, and our belief currently is that probably we could see some increase in supply as well as competitive pressure once all those capacities start hitting it and there is no incremental demand in 25. But current undertone is that the demand remains positive. We'll have to wait and see how it turns out.
All right, Mangesh, final question before we let you go. You're still not impressed with Shree Cement. North Indian companies, as you mentioned, pricing was good. Demand is fairly good as well. But Shree, you still have a sell rating? It's because of valuations itself?
Yes, unfortunately, it's one of the best companies in the sector. So the valuations is the only factor not positive on the stock.
Okay, Mangesh, we'll let you go on that note. Thanks a lot for joining in. Appreciate your thoughts. That's Mangesh Barang of Centrum talking about the cement sector. By the way, that's the Federation of Automobile Dealers Association with their report on how August has shaped up. The total vehicle retail sales have gone up almost 8.6% in the month of August. This is for the sector on the whole. Importantly, a lot of sectors that were languishing with very low single-digit growth are now starting to pick up. Two-wheelers, for example, is up almost 6.5%. And the Federation says that after a prolonged period of stagnation, rural demand is now showing signs of a positive resurgence. So that's admirable. But they also talk about how the recovery remains tenuous, contingent on the performance of the final phase of the monsoon season, which has been deficient, as we know. But positive data coming in from the Federation of Automobile Dealers. Let's also try and get some 9-10 calls going. Sudarshan Sukhani and Mitesh Thakkar are back with us. Folks, looks like it's going to be a slightly flat start with a bit of a positive bias. So what do we do at 9-10? Sudarshan, first to you.
Well, we still look to buy the Nifty on dips. Glenmark is a buy with a stop under 750.
And Mitesh, how about you?
I'll go with the buy on Motherson Sumi. Keep a stop below 100 and 106.5, 107 should be the target.
Okay, all right. Thanks a lot, gentlemen, for giving us that call. Well, let's revise a couple of stocks for you. Vivek joins us first up to tell us about one of those outperformance of the last couple of months, BHEL. Vivek.
Well, good morning. Absolutely right. This particular stock has been on a tear in the last couple of days, especially given the revival as far as thermal ordering is concerned. Today morning, a very interesting report from JM Financial. JM Financial has gone ahead and initiate coverage on the stock. They have a buy rating. Target price quite steep at 165 rupees a share. What is the rationale behind this particular buy rating that they have? They believe that the company benefits from a revival in thermal capex, and along with that, the company has also strategically diversified into non-power businesses in recent years. Along with that, the company is transforming into a diversified engineering company, entering fast-growing areas like railways, defense, and renewable energy, which JM Financial believes will drive long-term sustainable growth. Going forward, they expect the company to deliver revenue, EBITDA, PAT CAGR of 17%, 76% and 96% respectively over FY23 to FY26. And lastly, what they are saying is that the earnings will be, number one, supported by healthy ordering, improved execution, as well as benefit from operating leverage.
Okay, Surbhi is also with us to talk about CDSL. Surbhi, over to you.
So Ambit has initiated coverage on CDSL. They have a buy rating with a target price of 1400 rupees. They say CDSL is the best play on equitization theme. Now CDSL is one of the two central security depositories that we have, and the total addressable market size is 900 crores, and they expect it to grow it to 2000 crores by FY30. CDSL will be benefited from increased retail participation and the IPOs that we have seen in the last 3 years, given their strong broker relationships, and that has also shown in their demat market share. So their demat market share has increased to 73% from 50% in December of 2019. Further, they say that insurance repository could add another 30% to their operating revenue. They expect their medium-term revenue and EBITDA growth to be higher at 11 to 12% versus pre-COVID levels of 8 to 6% due to increased allocation in equities, growing popularity of mobile investing and equitization theme with more companies listing. They evaluate at 41 times FY25 EPS.
Okay, thanks a lot for that, Surbhi. Well, I'm focusing on Coal India. It was one of the big movers yesterday. Nuvama has come up with a note. They have a buy rating out there. They're saying it's one of their top picks in the mining space. The target price they have is around 361. They highlight the fact that valuation-wise, well, it's very, very cheap, trading at around 2.6 times odd. The key reasons that they've highlighted, one is they're looking at the performance of April to August, and out there they've delivered off-take growth of close to around 8%. So they believe that will put to rest those doubters that are saying volume growth is not going to come about. The performance in the first few months has been good. They're also saying since volumes are growing, operating leverage will play out because the largest cost for them is employee cost, which is already in the price. Thermal power generation, well, that is likely to see a big surge because of the increased power demand. And as we were discussing earlier, renewables can do only a particular extent in the near term. In the time to come, maybe they take over. But as of now, bulk of this generation will come in from the thermal side. Nuvama is saying that for the year, they are working with a 7% growth in terms of volumes. And finally, e-auction prices. Remember, the e-auction premium to FSA prices had fallen down to the mid-50s. That is back up to close to around 80% in the month of August. So they're saying e-auction prices will hold firm as well, though they are factoring in that from Q1 prices of around 3,700 rupees per ton, it could come in to around 2,700 rupees. Put all this together, Nuvama is impressed with the stock, and that's why they have a buy rating, top pick in the mining space.
Okay, top pick in the mining space. I'm watching out for two more stocks. One of them is Raymond, as Jefferies has initiated a buy on the stock, and they have a price target of 2,600, as we told you earlier. So Raymond is one stock that you should keep on your radar this morning. The stock is up 7.5% right now. Big moves coming in over there. And the other one is Paytm. It's up almost about 1.5% right now, as the disbursal growth has come in for the month of August. It's looking pretty good, 127% year on year. If you feel like it's on a low base, even on a month-on-month basis, Paytm is showing almost a 6.5% disbursal growth. And the GMV has gone up also about 47% year on year. So these are a couple of stocks that the market could look at this morning. But if Mitesh is with us, we can get a quick comment in. Mitesh, do you track Raymond by any chance?
I do. It's been making fresh highs and showing great momentum on the upside. In fact, while the fundamental target is much higher than what I had thought, initially when the stock broke out above this highs of 1,600, we had taken a target of around 2,000 with a possibility of 2,350 as the extension. So I think we are heading towards 2,350 at least, and then we'll take it from there.
Okay, well, we just have a couple of seconds before the markets open for the day, so let's get our sights set on that. We are at a 1-month high, the Nifty and the sensex, so important to see if we can build on to those gains. Here's the first take on the index, up about 30 odd points, so that's not bad actually. A very good start for the mid-caps, by the way, almost 0.5% higher, while the bank Nifty is absolutely flat. So suffice to say it's a green opening, but marginally in the green as we speak. Cipla is your big mover, up about 1%. You have Grasim, Hero MotoCorp is up almost about 0.5%. Titan, HDFC Life, Apollo Hospitals are a couple of other names that are trending in the green right now. In fact, L&T, which has been your big gainer this year, is once again putting on some more weight. So 0.5% higher on L&T. Not just that, the other gainers include names like Coal India, as you know, Nigel was referring to. Nestle has been a big mover as well. So largely the market is very quiet, but there are individual stocks which are sort of, moving with quite a bit of strength. In the broader markets, actually, many stocks are hitting fresh highs. Sugar stocks, Bajaj Hindustan is at a fresh high. You have, MMTC, IDFC First Bank, Bank of Maharashtra, all sitting at fresh highs this morning. We'll come to that in greater detail later. But let's find out what's dragging the market today. Dr. Reddy's is down about 1.5%, although no official confirmation or denial from Dr. Reddy's. But nevertheless, the stock is down in the red. Hindalco, Bharti Airtel, JSW Steel, Tata Steel, Eicher Motors, and Maruti Suzuki, a couple of other stocks that are in the red. In fact, some of these names like Infosys, etc., are also coming in for a little bit of profit taking. So do keep an eye out on that. But the mid-cap index party continues over there. As you can see on your screen, it has crossed that 40,000 mark on the mid-cap index. So I think that's where all the action is.
Well, that's right. The Nifty has come off a little bit from the day's top. It's up only around 15 points now. But the mid-cap index, well, stocks are flying away out there. Let's run you through a few of them. IRFC, the stock was up yesterday. So in 2 sessions, the stock is up 35%. Massive move out there. JMR Power and Urban, well, yesterday, in fact, they were up close to around 20%. They've got that smart meter tendering order that came in. So that stock was up 20% yesterday. Today, it's up another 10%. MMTC, well, I don't know how you justify these valuations, but anyway, that stock is up close to around 7% today. And for the week itself, it's up close to around 30%. RVNL continues to stride ahead. That's up close to around 4.5%. Suzlon as well, up close to around 3%. Volume's very, very high out there. And IEX, post that monthly update, that stock's up close to around 3%. Zen Technologies, they won a 120 crore order that was announced earlier today. So that stock as well is holding higher with some gains as we speak. Prashant, what else?
It's a good looking market to begin the day. Almost 30 points higher, 19,555 is where we are at. These railway names that you guys mentioned, right? I mean, IRFC is up another 11%. It's coming up with huge volumes right at the top of the right at the beginning. RVNL, I think you guys mentioned, 3.5%. IEX is up 3%. MMTC saw a 10% move yesterday. It's up another 7 to start the day with. Nazara 10 yesterday, 5% this morning. Raymond, of course, there's that initiating note. Lots of initiations on Raymond recently. There is GMR Power, which is up another 10%. I mean, after yesterday's very strong gains. So almost 38 now on large volumes. Suzlon is up almost at about 25 rupees now. UCO Bank, 4.25%. NHPC is up about 2%. Praj is up about 1.5%. Coming in thick and fast. Birla Cable is up about 5%. So it was a large mover yesterday. coming up with some volume, so that's why I'm mentioning it. I think HPL Electric is another one which has been moving non-stop along with Genus Power. So that's up another 5% to start the day with. On the downside, there's not very much. Dr. Reddy's is down about 1.25%. Jupiter Wagons, the company we had on recently, that's down about 4.5%. And Jaiprakash, which is gone up about 30-40% in the last 4-5 days, is pulling back some 3%. So just under 13 rupees on Jaiprakash. Yesterday, that stock was up 20%. So yeah, there is a little bit of pullback. Genus Power, that's not up 5. Surprisingly, it's not up 5%. It's down 1.25%. Actually 1.8%, a little more at this point in time. So 14 points, quiet, but market breadth is very strong. It's almost 5:1 in favor of advances at this point in time. Okay, our market master is with us. Dheeraj Agarwal is Managing Director at Ambit Capital. He's joining in to take some questions. Dheeraj, good to have you with us here.
Hi.
Good to see you here in our studios.
Hi.
Thanks
nice
very much.
Nice to be here again.
Market looking good, Dheeraj? Good for more?
Yeah, markets are looking good. It's been two markets actually, right? So large caps have been mostly range bound and the mid caps have been tearing away. But yeah, looks like there is more to go. I don't think it's in a bubble zone yet.
Funds that you speak with, is anyone sitting on a lot of cash? Or I'm saying, are people holding? I spoke to someone yesterday, not a large fund. They said they're sitting on some 22-23% cash.
I think the cash...
people are taking longer to put the money to work. That is true.
Yeah.
But just your feedback.
Cash levels are high at this point of time. People are a little worried. So typically, whenever this phenomena happens, that the mid caps outperform the large caps by such a large amount. Historically, it's not ended well. So memories of 2016-17 are coming back. In fact, the NSE mid cap ratio to Nifty ratio has surpassed 2017 high, just by a margin, but it has. Small cap to Nifty ratio has still not surpassed 2017 high. So that's causing a little bit of worry that have we run too fast too soon, because the mid cap indices are up more than 30% in the last 5 or 6 months. So that's worrying people a little bit, but it's almost like that when you go on a long drive with a 5-year-old and they keep on asking, are we there yet?
You start a 10-hour journey and within an hour they say, well, we're almost there.
You manage your expectations, basically. That's what you do, right? Yeah, we're used to that. Dheeraj, thanks for being here in the studio. How are you approaching it in the mid-cap space? Because anything and everything is rallying, right?
That's right.
And so a lot of new sectors are coming up. The old the laggards are also coming back, whether it's sugar, capital goods, defense, aerospace, anything and everything. So how do you sift the wheat from the chaff, and what are the pockets to look at now?
So that I think is the most important thing at this point of time, because it's very easy to get carried away. In the short run, everything is moving and stocks are reacting a lot to news flows. So even without giving any consideration to what the impact of the news flow on the earnings is. So something which might move the earnings by 2% or 1%, but the news flow, the headline seems interesting and the stocks are moving 20 and 30. So it's very important at this point of time to actually focus on companies which can deliver long-term earnings growth, which are focusing on capital allocation, and where the valuations are not sky high. And I think you can find ideas across sectors at this point of time. So it's very difficult in the mid-cap space to either pick a theme or sectors. It's more company-specific. A number of spaces are doing well, as you rightly said. Capital goods, there are orders coming in. Infrastructure, railways, orders coming in. Defense is doing well.
But these spaces have rallied a lot also, right?
Yes.
So I guess that alpha is something that you may not be able to create from here on. My question more is, from here on, where do you see both value as well as growth?
So, for example, we are at the margin constructive on chemicals. The sector has corrected quite a bit. There are signs that the chemical prices in China are rebounding in the last 2 or 3 weeks. Valuations have cooled off from the peak. So that's one example of a space to look at. There are a number of mid-cap banks and NBFCs at this point of time which have underperformed the market in the last few months in offer value. So because of the rotational nature of the market, you can always find pockets which are not so red hot in the short run and where there is value. Defense, yes, I agree. It's looking a little bit of overheated scenario, despite the fact that the business numbers are good. And so could many of the classic capex plays could be. And there are early signs of that. ABB and Siemens have stopped performing, for example, in the last month and a half. So the large cap space the large cap stocks in that space, which were also in a tier, and ABB YTD has done pretty well, 40-45% up. But if we see last 2 months has been broadly flat. But the mid caps are still running away.
All right. Hi, Dheeraj. Good to have you in the studio. You know, Dheeraj, you briefly mentioned about banks and financials as well. Some of them are still offering value and some of them have underperformed. What comes to mind is Kotak Mahindra Bank and HDFC Bank. They haven't really participated in the party. Do they come onto your list? In the past, you have mentioned, I think, that ICICI Bank gets preference above them. But do you think the time has come now for a longer-term investor to allocate some money to well-run banks?
When I say it's a well-run bank.
No, to these two in particular, because they have underperformed.
That's true. You know, one other favorite thing which I think I mentioned in the studio last time when I came here of mine is convergence. So 2014 to 20 was a period of divergence or dispersion. Right now we're going into a period of convergence. And there's convergence between large caps and mid caps, there's convergence between stocks within a sector or companies within a sector. And largely driven by fundamental shifts, right? So at this point of time, if you actually compare the matrices of the top 4 large cap banks, they look very similar. And the valuations are converging. I think they could converge a little bit more. So even for some more time to come, I think Axis and ICICI could end up outperforming the other two.
Okay, Axis and ICICI could end up outperforming. Where else? You said you like chemicals because that space has, of course, been beaten down quite a bit. So some of the laggards are coming back. Any other themes that look good for you? EVs are picking up in a big way. Sugar is coming back in a big way as well.
I don't know much about sugar, but I mean, there are a few spaces like that. So select automobiles. I mean, I've been very positive on automobiles for a while. We've talked about this every time. And
which are your top picks now?
So automobiles, I continue with Tata Motors, Eicher, TVS. So same names. Few of them have consolidated for a while. Eicher has consolidated post the Harley-Davidson news. But the longer run, I think, is still do well.
Any of the EVs that you like, especially the EVs who are getting orders from, you know, state transport undertakings, whether it's the JBM Autos, Electra Green Techs of the world, not just in the bus space, but even on the two-wheeler side, something like an Endurance, Varroc?
I'm not that well versed with those smaller names. I would just sidestep that question. But within that, we like TVS. I mean, the TVS EV, 2 EV market share is now pretty much industry leading at this point in time. They've caught up really well in the last few months. So that's one structural OEM story, which is also an EV play that we really like.
You guys have put out a note from CDSL this morning, I think, initiating coverage. You want to talk about that? I mean, what's the play? Why do you like that?
No, I'm a little out of touch on that.
You know, by the way, Sonia, you were talking about railways, right? Vivek put out a link and we'll kind of revisit that yesterday. The FY25, that is 1 year forward earnings expectation, P multiples are actually only, I was surprised, 19-20 times. I mean, that's very rare, right? I mean, that is on the lower end of what you're used to. Otherwise, it's 30, 40, 50 times. But even after these stocks going up 3, 4, 5x, I mean, they're not, I mean, if the tailwind is there and it's all about execution, I mean,
but
they're not wildly
expensive. It depends also on what the
expensive.
historic multiple are, right?
Yeah, that's true. I mean, PSUs don't usually command very high P multiples. Any thoughts here?
I would say historic multiples have a limited role to play here because especially if the growth curve changes in a dramatic fashion. So historically, if you see many of the PSUs have not really grown at a very fast pace. So if the current growth rates are significantly higher as compared to its own history, multiples can re-rate much higher. Second thing which is to be kept in mind is growth with respect to its own history, also with respect to the market. I mean, let's take the example of a different sector. So consumer names with only 14, 15, 16% kind of earnings growth got re-rated between 14 and 20 from 30, 40 times multiples to 70, 80 times multiples. Last time they probably traded at 60, 70 was in 90s when earnings growth was 28, 30. But you know, this current 16% earnings growth rate compared at that point of time to 7% of the Nifty. So similarly, if let's say if there's a PSU, for example, growing at 20% compared to 11, 12% for Nifty, that's pretty good. And hence, some of the historical comparisons in P will actually fade and not work. Like it didn't work for consumers. I mean, consumers could have looked very ridiculously expensive compared to historical Ps in 16 or 17, but if you got out, you missed the bus.
What about the QSR theme? We briefly discussed that the last time you joined in here. What do you think? Have you had a closer look out there? I think something that's an ancillary is Zomato, and you're quite positive out there. So any view on QSR and updated view on Zomato? They had some shares to sell, a big fund out there, and it got lapped up.
Yeah. So Zomato is a big challenge to QSRs, right? Because it offers you variety.
Yeah.
It offers you choice as compared to sticking to one particular kind of food, etc. And that's what I think I broadly mentioned. We were comparing Jubilant to Zomato last time when I was here. So pretty much still maintain that. I mean, there may be one or two smaller QSR players looking attractive at this point, but as a theme,
you'll prefer Zomato.
Somebody like Zomato is probably.
Any view on Paytm? They came out with their update today. Looked pretty okay. Any view out there?
No, don't have a view on Paytm.
No?
Do you track any of these entertainment, gaming companies? Nazara Tech has been in the news. PVR has come back in a big way. Delta Corp, of course, has its own issues. But any of these that you like?
No, I don't track it. But gaming is a high-growth industry worldwide. Gaming and entertainment is a high-growth industry worldwide. So I read an interesting news last week that Taylor Swift shows in the US plus Barbieheimer, just these three entertainment events added 0.6% to US's quarterly GDP.
Wow.
So that's
Taylor Swift is an economy in herself, right?
0.6% to 0.6%?
0.6% to US's quarterly GDP.
Quarterly, okay.
Yeah. Yeah,
Wow.
not the annual GDP, quarterly GDP. so that should tell you how large gaming and entertainment industry is now becoming.
You're reaching that point where you may have to pay for that ticket, by the way. Take your daughter to a Taylor Swift concert.
Well, not likely.
All right, but Dheeraj, always great speaking with you. Thanks for joining us.
Thank you so much.
Okay,
Thanks.
and thanks for being here in the studio.
Sure.
Okay, well, let's move on now from Taylor Swift back to business, right? We have to track a couple of companies. Endurance Technology, actually, we were just having the discussion on how some of these EV players are doing quite well. It was a strong Q1 for them, led by traction in the electric vehicle order book. Do note that EV orders are now 42% of their order book in FY23 versus just 12% in FY22. So to discuss the business opportunity and the demand, we have Ramesh Gehani, the Executive Director and COO at Endurance Technologies. Of course, he talks about his own business, but he also has a very strong, keen eye on the industry on the whole. So he'll give us a lot of perspective as well. Mr. Gehani, always great speaking with you. And, we enjoy these conversations because you get to learn a lot about what's happening on the ground. But first, tell me a little bit about Europe, because 25% of your business comes from there. And in Q1, you saw very good growth, more than 20% in your revenues. Which are the pockets that are looking good there? And do you think the worst is over in terms of a slowdown?
Yeah, good morning, Sonia. Thank you for the kind words, first of all. As far as Europe is concerned, see, it's still a mixed bag of many things. I think EV business is picking up quite a bit. Basic hybrid vehicles and other things are picking up traction. The only thing is that the dynamics over there are still, a bit uncertain, because the vehicles which have been sold are those which have been booked earlier. So it's not the growth that which you see right now is true to current situation. It's previous orders which have been booked are now being delivered. So the stock levels are still there, and the market conditions over there may have improved because the energy costs and all have substantially come down, which has a positive impact on your margins and business cycles. That's fine. But the situation out there is still challenging. I wouldn't say that it's eased out. I wouldn't say that the worst is already over. I wouldn't say that.
Okay, so situation in Europe is still challenging. You're saying that there were a lot of previous orders that were booked and that are now being delivered. But on the fresh ordering front, you're not seeing too much. But let's talk about the pocket that's doing well for you, EVs, right? I mean, if you just go by the numbers, you did 90 crores of EV orders in FY22. That has risen to 380 crores in FY23. Where do you think you can end FY24 with on the EV front?
See, I would like to give that number because that will be purely dependent on the consumption patterns. But yes, we are doing pretty well on EV sector. We have booked orders of 85 million euros and 112 million euros in the previous year. That's close to somewhere around 80% or 70% of our annual sales in Europe. So I think we are doing pretty well as far as picking up new orders are concerned. We are building up trust with our customers, and new orders are flowing in. And I think we will be encashing upon these opportunities and the position of strength.
Okay, all right. Hi, sir. Good morning. If you could tell us, as a percentage of your total revenues, how much will EVs contribute? How does it scale up from here on? Because that's clearly going to be growing at a faster clip. And also, what's the margin difference between your core business and the EV business?
See, first of all, let us understand the products that we are supplying to EV business are those similar to what we do for the ICE. Braking, transmission, braking, suspension, and castings. So the product doesn't change much. It's only the configuration of the products which change because they've got to be suitable and compatible to the EV vehicles. The sizes would be different. So I won't put a number that the margins would be better, but yes, they're a bit slightly better than what we get in ICE. Primarily because the vehicle configuration is different. A better value add is there in-house.
Okay.
In your presentation, you said you added Honda Motors as a new EV customer in August of this year. What is the quantum of the order that you got from HMSI, and also any more new OEMs that you have added to the list in the EV space?
Yeah, see, we are, as I said earlier in my previous conversations, I told you that we were a bit late on EV sector, but we now have picked up momentum. We have booked up orders close to 600 crores, and they're into full action. Honda, yes, very recently we picked up one of their prime models for EV. We picked up that order. We've got Ather brakes business, and we've got Okinawa. And in fact, we are going all out with all these majors where we can fetch more orders. We are already into Chetak, and so we are probably everywhere right now. But our intensity of penetration will not reduce till the time we find that yes, we are well positioned in the EV space.
And okay, so you said 600 crores of orders is what you picked up. That is for which period? Because your EV order book in FY23 was 380 crores. So this is over and above that?
No, it's total 600 crores that we have picked up.
Okay, total 600 crores is your EV orders. Executable by when? And what would the contribution be to the revenue stream in FY24?
The revenue stream, I can't put that number right now because the revenue stream of ICE contributions is also increasing. So this ratio will keep on changing. But I can say that EV space, 600 crores is expected to show full numbers, peak value by FY24.
All right, Mr. Gyani, you've outgrown the industry as well, particularly on your standalone business. Good delivery is what you have given us. Tell us for the year on a consolidated basis. Since Europe, you're executing the pending orders, there has been margin improvement there as well. What's the ballpark growth number you're looking at for this year? And also, what's the margin outlook? First quarter as well, there was good margin improvement. It came in at around 16% approximately. Your view from year on, how do you see margins trending as well as growth?
See, growth, I'll tell you, there are many growth factors that we have lined up for ourselves. These are efforts of the past, of course. Last 5 years or 4 years, we've picked up orders somewhere around 3,200 crores, out of which 2,400 or something would be just new business wins. So, and around 800 crores is replacement business. So that's a good number to carry forward and to see the peak value coming up by somewhere around end of FY24. End of FY25, all the peak values that will come in. Now, these are numbers that we are not chasing. They're based on the past efforts that we have had in new business wins. And the kind of business model that we have changed for ourselves is definitely, proving better because we've tried to give complete solutions to our customers by adding forward and backward integrations both to our product verticals. We've enhanced our product, configuration, which is more suitable to the current environment of providing a complete solution to the customers.
Right.
Sure. Okay, just one follow-up there. In the EV space, you said that your order book is 600 crores in total. Does that include the orders that you've got from Maxwell Energy Systems, the acquisition that you made in July of last year? And what's the update over there? I mean, what's the current order book for Maxwell?
See, Maxwell total order book is around 320 odd crores.
Okay.
Is around 320 odd crores, and that will be done by FY26. The peak value of that will come by FY26.
Okay, so 320 crores is the total order book at Maxwell, executed by FY26, you said. This is over and above the 600 crores that's at Endurance front, right?
Yes, this is over and above the 600 crores at Endurance front.
So the total orders with Endurance and Maxwell put together is about 920 crores?
Yeah, adding up both, it would be summing up to that much.
Okay, and my colleague Nigel was also asking you about the margins improvement in the European business, and that's quite a bit, right? Because of the falling gas prices. It's improved to 16.1% in this quarter. Is there scope to improve it further in Europe?
Yeah, I won't be surprised because, the kind of order books that we have on EV business over there and otherwise our configuration of, business model has been changing. The positive part is that, energy has now become an indexing element of the OEM pricing. So anything which changes plus or minus a particular datum, that will be indexed upwards or bottom. So that variable which was playing a big role on our margins is now settled with the customers. And we can only here on improve on the margins, and because this kind of dynamics is not going to play again, as it is going to be indexed by the customers.
So Europe will have improvement in margins, and in the first quarter you have grown by close to around 16% for a consolidated entity. So could we be targeting mid-teen growth for the year with mid-teen margins?
See, I don't put numbers like this because it depends on how the OEMs perform. We must appreciate one thing, that our performance is also dependent on how the OEMs perform. Right now, you must have seen, July has been a bit too down. The numbers are pretty down, around 11% of loss on two-wheeler business. But that doesn't mean that I stick on to 1 month and, recalibrating my numbers. I've got to look into the overall year, that how it's going to be spanning out. So the peak period is yet to come. We're likely to look at good numbers because the vehicles, the new model introductions by the OEMs is gaining pretty much well in as far as the target audience is concerned. So I think those numbers will increase. I wouldn't say that which vehicle will do better or which one will not, but higher CC vehicles where premiumization is more for us, right? That is moving upwards, which is a very positive sign for India.
You're also adding capacity for electric vehicle scooter castings. Just wanted to understand how much capacity are you adding and how much are you planning to spend on capex over the next 1 to 2 years? Will it largely be from internal accruals or would you take on any debt?
No, we are not going to plan any internal any debt because we are cash positive, and internal accruals is something that we have always been dependent on to do fresh capex. Our capex has generally been close to 350 crores every year. That's domestic I'm talking about. But these expansions which we are talking about are something different. Alloy wheel expansion, brakes expansion is a big up move that we have seen for ourselves. The OEMs have put in full confidence into our products, and we are increasing our capacity at Pune plant and Aurangabad plant for brakes and Pune for alloy wheels. The capacities that we are moving up from is 190,000 alloy wheel sets to 210,000 alloy wheel sets. As far as brakes is concerned, I've already said this previously, that we are close to 6.1 million brake assemblies and 8.2 million of steel disc supplies capacities.
All right, so we'll leave it there. Thank you very much for your time. Great speaking with you and good luck going forward. Appreciate the conversation here this morning. The market, by the way, is back up 30 points, 32 points, 19,560 is where we're at. And, just a few new movers into the mix now from the morning. IDBI, which was a mover yesterday, did not show up right at the beginning. It's up 6%. IDBI is at about 69 rupees. Devyani, we were talking about some of these QSR companies with Dheeraj earlier, 5% on Devyani, stocks at about 210. And something like a Castrol is coming up with a 4% gain, 150. And throw in lots of public sector banks which are participating. The likes of Central Bank, there's UCO Bank, there's Punjab and Sindh Bank, and a few others as well, which are doing well. So, it's a good-looking, broader market screen, definitely. Sugar is going to be the focus when we come back. Tarun Sani of Triveni Engineering and Vijay Banka of Dwarikesh Sugar will join in. We saw a big rally yesterday. Cane prices in Uttar Pradesh are indicated to go up, and there is a lot more happening on that front. We'll chat with both of them on the other side. Okay, welcome back. We're up, 40 points on the Nifty. We're at about 19,570 at this point in time. Let's shift focus to the sugar sector. Now, the Uttar Pradesh government is likely to increase the sugarcane SAP, that is the state-advised price, by 25 rupees per quintal for the season 2023-24. Also, weak monsoon has led to a surge in sugar prices at the retail level. To know more about the the entire picture and how things are shaping up. We have Tarun Sawhney, Vice Chairman and Managing Director at Triveni Engineering, and Vijay Banka, Managing Director at Dwarkesh Sugar Industries. Gentlemen, good morning. Great to have both of you here. Appreciate it very much as always. Mrs. Sawhney, is this confirmed, the SAP going up?
No, it's absolutely not confirmed. Good morning to you. I think it's a rumor in the market, and I'm glad that we're addressing this at this particular point in time. Firstly, the determination of SAP by the Uttar Pradesh government, September is far too early. We're at the very beginning of September. Typically, the Uttar Pradesh government likes deliberations on cane price during the month of October, and we enter into the final part of that determination come November, and sometimes even December. So this is far too early. It is a rumor. And frankly speaking, I think 25 rupees would be a very high cane price increase if that were to happen in Uttar Pradesh. And I think that the track record of the Uttar Pradesh government, which is for the last few years, has been quite remarkable. They've been very sensitive about where sugar prices are and what is happening on sugarcane productivity, so that the income of the farmer always continues on a higher trend. And therefore, I don't necessarily see that the increase in SAP, when it does happen, and if it does happen, will be as high as what is being rumored at this particular point in time.
Okay, now, Mr. Banka, do come in. I mean, same question to you. And just a comment that some of the states, right? I mean, big sugar producing states, I'm not talking about Uttar Pradesh, but states like Maharashtra, Karnataka, rainfall has been scanty, has been patchy. So sugarcane yields are down. So would this kind of a move tell us the experience in UP, and would this make sense? Logically, would this make sense? Mr. Sawhney says no.
Well, in Maharashtra, the rainfall has, of course, been very scanty. I think the deficit is more than 20% if you combine the months of June, July, and August. So it definitely has kind of impacted the yield and the sugar available for crushing. So we will see a lesser quantity of sugar production from Maharashtra. ISMA has estimated that it's going to be about 95 lakh tons. UP also has had heavy rainfalls, more than usual or more than normal. So some parts of the UP have been badly affected. Flooding has happened in few parts, so that has also stunted the growth of sugarcane. So we will have to wait and see, if the water recedes early and then, the farms dry up, then there's a possibility that we may recover some of the lost ground.
But if not,
as Mr. Sawhney rightly said.
Yeah, go on. Sorry. Go on, please.
Mr. Sawhney rightly said, the issue of SAP is just a market speculation. So we will have to wait and see. There is a process the government follows, and once the government follows the process, we will hear about the SAP for the next year, for the next season in the next couple of months.
Okay. Mr. Banka, morning. I'm also interested in what's happening with the diversion to ethanol production. Now, with this state of the sugar industry, will there be a cutback in the sugar diversion to ethanol production as well?
I don't think so. Ethanol production has got all the impetus from the government, and government is focused, and so is the industry. So capacities have been set up all across. So we don't see any kind of setback to the ethanol production. There have been some transactional issues, some glitches here and there. Well, we expect that the government will iron them out.
Okay. Tarun, what about you? What is the situation as far as ethanol production is concerned now? Are we on track to meet the targets? And with the current situation, do you see any cutback?
So as we move into Q4 of this ethanol supply year, I don't see any cutback on targets at all. The government has increased the price of food grains that will be converted into ethanol. And I think that's had a positive impact on maize as well as open market rice. And so we're seeing greater amounts of distilleries that had stopped operations for a few days have restarted and are supplying into the ethanol supply program. I want to emphasize the fact that the sugar industry is actually doubling down. The sugar industry has come out quite vociferously and said that we are in complete support of this program, that we will divert all excess molasses towards the ethanol supply program so that we meet the targets for this year. And of course, as we move into the next ethanol supply year, we will look forward to commensurate price increases so that we can plan ahead and meet the more aggressive targets for the next supply year.
Okay, now, so there were restrictions placed on exports, right? I think 6.1 million tons this season in terms of exports. There has been some talk, Tarun, of limiting sugar imports as well. Have you heard anything?
So there are no sugar imports at this particular point in time. The determination on sugar exports is one that will be made probably at the beginning of the next calendar year, once the central government fully ascertains the extent of sugar production in the country. To our best knowledge at Triveni, we believe that the production of sugar in the coming season, while it will be lower than the previous season, will still be substantially higher than the consumption of sugar in the country and the sugar that will be diverted towards the ethanol supply program. And therefore, I think there will be some small quantity that will be available for sugar exports when this determination is made come January 2024. So I am still quite hopeful that we will have not perhaps such a large program as we did last year and the year before, but something quite substantial so that the markets that have been accustomed to receive...
So Tarun, you're talking about that 6 million number, or you're talking about a new number? The previous year was 11 million.
Correct. So 11 million that came down to 6 million, and that next year will be lower than 6 million, substantially lower than 6 million, but there at least will be a number. And I think that is very important, not just from the Indian domestic perspective, but also India's role within the trade of global sugar.
Okay, and there is no banning of sugar imports, if it comes to that, I mean, no impact, you're saying? There are no imports in any case? That'll make no difference?
Correct.
Okay. Got that. Just one more question, Tarun. We're hearing how global sugar prices are spiking higher, right? They're at a couple multi-year high, etc. Are prices here rising in a similar way? Or there will be a bit of a cap here? Prices will not go up, even if... So we should not really take indication from what happens to global sugar prices.
I think you've hit the nail on the head. International sugar prices and domestic prices are delineated to a very, very large extent. And therefore, there is no direct linkage or causality between what happens in global market prices and domestic Indian sugar prices. Prices in India have increased just very slightly in the last week or 10 days, but these are sort of momentary responses to festival demand, etc. that happens. I think overall we're in a scenario of stable sugar pricing, and I don't see any particular spikes of sugar price in the months that lie ahead. I see, although I do see a period of great stability, which is quite good for all of us in the industry.
Mr. Banka, same question to you on the sugar pricing picture. What is the situation now? I think retail sugar prices are a little around that 45 rupees a kilo. Do you expect prices to improve in the quarters to come, and global sugar prices as well? What's your view?
See, the global Indian sugar domestic prices are actually dealing with the global sugar prices because as we have seen in the last year, domestic prices have found no resonance from the global sugar prices. Global sugar prices are high because of various factors, because the trade believes that India may or may not be exporting more sugar. Thailand crop is bad. Of course, there's a big production number expected from Brazil, but overall, the situation is not going to be. It's going to be a tight situation going forward. Yes, the sugar prices have rallied in the last couple of weeks in India, but as Mr. Shawnee said, it's mainly because of the festival demand that is there in front of us. And we see prices, there is going to be no runaway increase in the prices. The prices will remain stable. And we only hope that if there is any increase in the SAP, it finds reflection in the domestic prices as well by a commensurate increase.
Okay, all right. Gentlemen, we leave it at that. Thanks a lot for joining in and telling us more about the sugar industry and how things are shaping up. But let's get back to the markets now. This is our special segment, Charting Trends. Gautam Shah, founder and chief strategist at Goldilocks Premium Research, joins us now to talk about what the way forward could look like for the market. And it's very interesting. In his report, he talks about how the big picture for a market is perhaps a breakout on the upside that's coming through. He says that the market could reverse and move up in a big way. So let's find out more. Gautam, good morning. How are you feeling about the market? You think that the next leg could be on the way up? And if yes, what are the levels to look at?
Good morning, Sonia. Yes, it does look like. I think we went through a very orderly correction for the last 6 weeks. And in that period, you had a scenario wherein the mid caps and small caps did exceedingly well. And given the kind of action that we've seen in the last 2 days, it just seems as if the markets are ready for a breakout on the upside. And that breakout takes place above the level of 19,600. And you must have seen as the markets got into September, the participation has been better, the leadership has returned, the momentum is excellent. And obviously, we are enjoying global tailwinds as well. So given all of these factors, it does seem as if the Nifty will finally move out of hibernation, get past 19,600 and gradually go back to levels of 20,000 and beyond. But the real story is outside of the Nifty, something that I've been maintaining all along. I think you have a lot of sectors like IT, metals, PSU, mid caps, small caps that continue to stand out, and we see great opportunities there.
Okay, it's interesting, a couple of points that you've made. You said that markets are ready for a breakout on the upside and the Nifty will gradually get to 20,000 and beyond. But more importantly, leadership has returned. Where do you see leadership now? Is it in IT, banks, and what else are you looking at?
When you look at the Nifty, you have to look at 3 different pockets, which is IT, banks, and Reliance. They basically constitute, I think, 50-60% of the Nifty. And what's happened in the last 2 days is that the IT index, after being in hibernation mode for almost a year has finally broken out on the upside. So that looks excellent on the charts. And I'm looking at a 2,000 to 3,000 point rally on the IT index from current levels. So all your top stocks, I think, could contribute significantly, which is going to help the Nifty. The Bank Nifty is still a bit of a laggard. It needs to get past the 45,000 on a closing basis. If that happens, we are looking at great strength. Otherwise, I think, Bank Nifty just remains a market performer.
Okay.
Gautam, hi, good morning. Now, the small cap index, right, recently took out its previous high, which was, I think, made in, January of 22, it was the last high, and we've recently taken it out. What happens to indices once they take out sort of, long-held previous highs? I mean, do they typically, is there a behavior we can refer to? Things may look overbought, but then a new high, does it mean meaningfully newer highs after that?
Interestingly, Prashant, I have 2 decades of experience at the markets, and that experience is not helping with what's happened with the mid caps and small caps. I think this is an absolutely out-of-the-box rally that we've seen in the last 3 months, maybe because domestic liquidity is coming in strongly into the mid caps and small caps as sticky money, as SIP money. And I think that's really been the game changer, and it's been the reason why small caps and mid caps have done so well. Yes, the small cap index has just got past the recent high, but don't look at it in absolute terms. Look at it in relative terms. In relative terms to the Nifty, I think the small cap index has a lot more upside potential from current levels. In fact, our working target for the mid cap index is about 42,000, and about 10-15% upside looks likely for the small caps even from here. Traditionally, if you look at the charts, you might feel that the small caps and mid caps are overbought. Yes, they are overbought. They will go through their knee-jerk reactions from time to time. It could happen any time. But trajectory-wise, I think all is still well, and there is clearly room for a lot more upside. So don't look at things absolutely. Look at things relative terms. That will make it a lot more comfortable to participate in this market.
Okay, you also said that in the large caps, it's the IT space that you're betting on in a big way, and there's a big breakout that you're expecting to see. What else? Reliance, L&T. L&T has come back in a big way as well. Where else do you see leadership?
Well, L&T has already done quite well, so I don't see it as an opportunity. But the real opportunity that I see is metals. I mean, look at the price action of the last 2 days. Look at what Tata Steel has done. Look at what Hindalco has done. Look at what JSW Steel is doing, JSPL is doing, Nalco is doing. I see it as a structural trend, and I see the NSE Metals Index moving to a level of 9,000, which is a good 2,000 points away from where we are right now. That's almost 17 to 20% upside. So I see metals as the next big trend over the next 3 to 6 months. Obviously, we have been recommending this to our subscribers at Goldilocks. So IT, metals, PSU, top of our list. Everything else is more of a market performer. At a 19,500 index, you need to be very careful where you want to commit into, because risk reward needs to be kept in mind.
Okay, so the metal space is something that you like, and you're saying the 17 to 20% upside in the metal sector is what you're looking at. There are a couple of these spaces that have become the flavor of the market lately, right? Whether it is defense, auto ancillaries, sugar suddenly come back. Do you think these are just fads and one should stay away, or anything looks interesting to you here?
Sonia, India recently did very well in the 4 into 400 meters. And I think you have a similar race playing out at the markets in the last few months, because there is one theme that does well. And then as it tires out, it passes it on to some other theme. And it's just carrying on for the last 4 months. Now, the way we look at it, chemicals, sugar and fertilizer seem to have come back very strongly. And in fact, even the unlocked trade, where we've been a big bull for the last couple of years. So these 4 pockets of the market, I think we would be extremely positive. And I feel if you have to commit capital into mid caps and small caps from a trading perspective, it could be in these 4 sectors.
Which are the 4 you said? Chemicals?
Chemicals as well, because it's come out of 18 months of consolidation, a very large time correction, and the last few days seem to have confirmed a big breakout for that index. So across the board, we are looking at strength for the chemical index.
So that's the second, expert who's come on our show, right? Chemicals. Even Dheeraj was talking about a pickup in chemicals after a long lull period.
Gautam, but fundamentally, yeah, I mean, you buy stuff at lows, right? But technically, you're supposed to buy strength. Where's the strength in chemicals?
The strength will come. That's the beauty of technical analysis. It tells you what smart money is doing, and it does seem as if smart money has already got into chemicals. And I think retail and obviously all of us will talk of it in much more detail going forward. So the charts are in sync. I think this has happened in the last 2 years. When nobody spoke about metals, metals saw probably one of the best rallies in 21. And I think something similar could happen in chemicals.
Okay, one final question. Since you said IT is the big sector that you're watching, a lot of these mid-cap IT names have already hit fresh 52-week highs, whether it's something like a Coforge, Persistent Systems, Emphasis, Cyient, all at fresh 52-week highs. You prefer mid-cap IT to the large caps?
Well, I do prefer mid-cap IT to the large caps in terms of holding on. But in terms of fresh bets, I'm clearly looking at the large cap IT, because I think mid cap IT is far, far away from support levels. But if the IT index does move up 2,000-3,000 points from here, mid cap IT will continue to participate. But I think it's a little risky to be committing big into mid cap IT at these prices. I think go with the big boys, Wipro, TCS, Tech Mahindra, HCL Tech. I think they could give you mid cap quality returns over the next 3 to 6 months.
Okay, all right. We'll leave it there. Thank you very much, Gautam. Appreciate you joining in and running us through all of that detail on the markets at this point in time. 50 points. So, yeah, coming up nicely. 19,580 is where we are at. Market breadth is moderated a bit. It was 5:1, but I mean, that's wild. Now it's more realistic, 3:1. Small cap index is up another 1%. So, from daily 0.5% compounding, now it's daily 1% compounding. So it's just been incredible, which Gautam also kind of alluded to. Now, railway stocks have been buzzing lately. They were up big time yesterday, and today also, most of them are high. Vivek is here to talk about the stock move, but also valuations on a one-year forward basis, which, as you will see, interestingly, at least on an absolute basis, are not absolutely wild. Most stocks are around that 20 times one-year F525 earnings. Vivek, tell us more. Morning.
Well, good morning. You're absolutely right. Even yesterday near closing time, we did mention these stocks and, how valuations are looking. Just a couple of quick pointers to add, before we actually get into the details. Number one, a lot of the stocks currently are actually seeing quite a bit of an uptick as far as their ordering activity is concerned, especially in the railway space. Also important to note that markets are liking the fact that these companies are now quite nimble, given the fact that a couple of years back, the companies used to get orders on a nomination basis, but now companies are getting orders on a competitively bid basis, so margins might be slightly lower. But despite that, the order books are burgeoning given the very strong ordering activity that you're seeing. But have a look at, how the stocks have performed. RVNL, the stock is up almost 4.5 times in the last year alone. 1 month, the stock is up 30%. Government holding here is 72.45, so no immediate need to go ahead and reduce stake from the government in order to meet the minimum public shareholding norm. Valuation, quite reasonable, 22 times FY25 one year forward, price to earnings. RITES, the stock up 68% in the last year, 1 month up close to 15%. Government holding here too, little over 72%. Valuation is quite reasonable, 19 to 20 times 1 year forward. That is FY25 PE. IRCTC has been a laggard, but also given the fact the stock is more richly valued compared to its other rail peers. Stock down 4% in the last year, 1 month up 8%. Government holding here little over 62%. Valuation at 32 times FY25 1 year forward. IRCON, the stock is tripled in the last year. 1 month the stock is up 34%. Government holding a little over 73%. Valuation 15 times 1 year forward FY25. IRFC, this particular stock, important to note, government holding here is 86.36%. So almost 11% headroom in order to go ahead and reduce to meet the minimum public shareholding norm. Valuations 1.6 times price to book, FY25 1 year forward. But this stock too has more than tripled, in the year gone by. And lastly, we are looking at RailTel, stock more than doubling in the last year. 1 month up 40%. Government holding here 72%. And valuations quite reasonable, 25 times 1 year forward price to earnings.
All right, Vivek, thanks a lot for that. So that's on the railway companies. Moving on to the fast track there. But let's take a quick break. On the other side, we will be shifting focus to the commodity markets. Manisha Gupta will be joining in. Stay tuned. Welcome back. Shifting focus to the commodity markets now. Manisha Gupta is joining in to tell us how the space is looking so far this morning. Manisha, what are you tracking?
Well, I'm looking at the overall non-agro commodities, industrial commodities rather, and all of them have started this week on a positive note. Yesterday was a great day and we seem to be extending gains for many of these commodities. I'll start with the crude oil prices because we've seen strength on this one continue. If you look at the last 1 week itself, we've seen 7% of gains come in for the crude oil prices. 99.5 is what we've done in early Asia, and this is on the back of strong Chinese measures. The economic data that has come in mixed, but better than what the street expected for some of those. The dollar index is off its highs as well. We still continue to trade below 104, and that has been supportive. The markets also are looking at prices firm ahead of the OPEC and allies meeting. There could be a formal announcement this week from Russia and Saudi Arabia about extending their output cuts for the month of October as well. And then it is about 1 million barrels that you could see coming from Saudi Arabia and 300 to 500,000 from Russia as well. That is what the markets seem seem to be factoring in right now. It also is about China coming out with a lot of data, which the markets believe has been factored in right now. The demand on ground seems to be improving. The numbers are positive that we've seen from US as well, from the summer driving demand season. All of that showing into the prices. And then for the metals as well, it has been positive. Most of these metals are trading at a multi-week highs. This is as China is expected to take higher action to support the real estate. We've seen those financial bonds, tax rebates come in. China also is looking to relax home purchase restrictions, and there are more rebates coming in for the first-time mortgage buyers. So there's lots that's happening on ground. We've seen the services data not come in so well, but the manufacturing and the factory activity for the month of August has been on the positive side, and that has been supportive. So we are looking at iron ore prices trading at 117. Steel is trading on the firmer note as well. And this is what we've done in last 1 week. So 7% of gains in crude oil prices. When you look at the metal prices, it's 1.5% to 2.5% of a jump up coming in across both for ferrous and non-ferrous metals here as well. I also want to show you on what the agri-industrial commodities are doing, because the surprise really is here. Lead, the battery maker, is 4.5% higher in last 1 week. Rubber is gained 6%. The last couple of quarters were not so great, but the month of August was positive. September starts on a positive note as well. Cotton 1.5% up. Sugar is trading at a 1-month high and has gained 4% in the previous week too.
All right, Manisha, thank you very much for that. You know, new listing coming through, Vishnu Prakashan. What an amazing listing. It was a small issue, but basically it's a super listing. 55% premium to the issue price is what we have. And it's an EPC company, right? I mean, they've got 4 segments: water supply projects, railways, roads, irrigation network projects. But we should have that stock up, the listing, just to make a quick mention of it. Before we take that quick break, we'll try and have that up in just a bit. Market, by the way, is doing just fine. Both the Nifty and the Bank Nifty, about 0.25% each. Broader market's doing much better. All right, Vishnu Prakash, after a quick break, I guess. There you go. That's the list I'm talking about. 53% higher, 151 on that one, right at the word go. We have the management coming up a little later, by the way. So stay tuned for that as well. We take our break. We are back with our special segment. It's the economy. My colleague Lata will get chatting with Professor Ramesh Chand, member at Niti Aayog, to talk about the deficient monsoon and the state of food prices. Stay tuned.